Hello, everyone, and thank you for joining the IR Summit for small caps. I hope you enjoyed the jazzy music as we started today's presentation. But this event is hosted by MZ Group. We are the world's largest one-stop shop for investor relations solutions, spanning 800 clients globally across 12 different exchanges. So I'm your host, Greg Falesnik, CEO of MZ North America. Following today's presentation, this will be available for replay at www.mzgroup.com for a period of about a year. And if you want to get in touch with us after today's presentation, feel free to reach out, send an email to info@mzgroup.com, and we'll get back to you. So again, thank you very much for joining us. I'd like to start today with, why do we do this? Why are we doing a thought leadership piece for small caps? Really, it's MZ Group is always focused on driving value for our clients. And in fact, our tagline is empowering investor relations. So our goal is really to help companies successfully navigate the capital markets through a combination of consulting and technology and partnerships, but also thought leadership and knowledge. So who's on today's call? I'll start by introducing Bob Powers. He's a Senior Vice President of Corporate Services at the OTC Markets. Bob, if you want to give a wave. OTC Markets operates a regulated stock market for the trading of over 12,000 US and global securities. They also organize these securities into 3 markets based on the quality and timeliness of the disclosures and the information which the company provides to investors. So those 3 tiers are OTCQX, OTCQB, and the Pink Open Market. Bob and the OTC have been partners to MZ for several years, so we're delighted to have him join us. Also joining us is Anil Mall. He's a director of listed company securities at the Canadian Stock Exchange, or more commonly referred to as the CSE. The Canadian Securities Exchange, for those of you that don't know it, really began operations in 2003 to provide a modern and efficient alternative for companies looking to access the Canadian public capital markets. Designed to meet the needs of emerging companies and their investors, the CSE now has more than 800 clients globally and convertible securities. So again, happy to have Anil here. He's also been a partner to MZ for many years, so thank you for joining. And then lastly, I'll introduce my colleague, Chris Tyson. Chris is an Executive Vice President at MZ Group, Investor Relations. And I think it's valuable to have Chris on the line because he's really bringing, about 20 years of thought leadership and experience spanning institutional sales and investor relations. Really works with SPACs and public and private companies here at MZ. So he brings a wealth of knowledge and someone that I know and trust very well. So I think maybe to kick things off today, Chris, I'd like to start with you. Let's talk a little bit about how small cap issuers approach their awareness initiatives in today's environment, and maybe kind of where is the best spend for their IR dollars?
Okay, thanks, Greg, and I appreciate the opportunity to participate on today's panel. Obviously, there's probably a lot of IR professionals out there, budgeting for their second half of 2023 IR spend, and they're looking to maximize the ROI on those dollars, right? So the first thing that we see from the buy side and retail and investors out there is really the issuer, the pubco, focusing on their public brand, knowing who they are, and having a clear and concise story, so that when they engage, when they come to your website or their IR website, there's a company that they can understand out of the gates. The access to information is readily and available, and they're easy to engage and understand the story. The second lever that I see that gains the most ROI is having an internal person on the marketing or social media side, being able to leverage and produce content to go outside on the company's Facebook, LinkedIn, Twitter, all those channels, and really have content to put out there. We're seeing with those that have that kind of secured from that aspect, investor relations is able to leverage all that content on other platforms and able to engage more with your investors or potential investors on those platforms there. And then the third and the final thing that we see is also, financial media. Financial media is not free. Some is, but you're going to have to dedicate a spend for your C-suite management team, either the CFO or the CEO, to go out there and do thought leadership across multiple platforms to really get the awareness engine going with the story. So we think if you out of the gates, if you kind of check those 3 boxes off, you really have a good shot on goal in creating a awareness around the story and being able to engage existing and new investors.
Great, thanks, Chris. And I think that's actually a great segue into something I was talking to Anil about the other day, and that's video marketing. So Anil, maybe you could comment a little bit about how that might play into the strategies that Chris was talking about.
Absolutely, Greg. I actually want to just start off quickly by thanking MZ Group for organizing this, the panel participants, as well as all of the attendees who are listening in on this. Now, to answer your question, Greg, investors, just like all of us, are human beings. We are very visual people. And I personally feel video marketing is quite a powerful tool, because not only does it offer a visual and immersive experience that investors, that IROs can use to grab a hold of an audience's attention, but it also allows for, an interesting way for storytelling, as well as connecting with investors on the human side.
That's interesting. And, one of the things that popped in my mind, probably the hottest topic in the news cycle right now is AI, right?
Yeah.
So, I don't know if you have any insights, but it'd be helpful just to think about if there are ways that, small cap companies can harness the power of AI marketing, and maybe just why are so many investment dollars pouring into that space right now?
Absolutely. Greg, why don't I start with the latter half of your question, because everyone's seen all the buzz around artificial intelligence. And as we see real world applications build around this technology, there has been an acceleration of investment dollars into this space. There's a stats company called PitchBook, and they have a recent report that reveals that in the last 5 years, different venture capital firms have actually increased their AI stakes from $408 million to now $4.8 billion. So that's a massive jump of investment dollars coming into that space. For example, AI assistants like Anthropic and ChatGPT-4 both have actually secured more than $1 billion in VC funding over the last little while. So that just gives you a little bit of an idea on how much money is coming into the space. Now, when it comes to the investment industry, if AI is harnessed correctly, it can provide a lot of new opportunities, as well as minimize potential threats for IR officers. Now, for an investor applying AI in their investment decisions, it presents a great opportunity to evaluate target companies, their financial health and performance from weeks to minutes, because everything is available at their fingertips. For an investor, basically at the same time, the investment relations officers, they can use AI software to their own advantages as well. But there are a few things AI can help with, but it's no substitute for human judgment. So they really have to pay attention to that, because there are a few things AI won't do that IR officers can pay attention to. Obviously you want to communicate with authenticity, and AI cannot provide that. Building great relationships is how you get investors, and you can't rely on artificial intelligence for that. So, but what AI can help with is improving the communication that you do have with your current investors, as well as targeting investors and from your peer groups. AI can help IR teams with identifying and targeting potential investors who are more likely to be interested in the company. The way they can do that is by analyzing data on investor behavior, by using different algorithms and identifying investors who have a history of investing in similar companies, or have expressed interest in companies in the same industry, possibly.
So that's actually very insightful. Maybe Bob, as kind of maybe in that segue, in that same idea and thought process, I'd like to just kind of get your take on investor marketing and how that's changed. During the COVID era, it all went virtual. It used to mostly be in person. And just maybe your take on what you're seeing for some of your listed companies. Is the most effective way to go out in person? Is it virtual, or is it really a combination?
Well, thanks, Greg, and thanks to you and MZ Group for inviting me to be on this panel. It's great to be here. Yeah, that's an interesting topic. If you look at what we've just gone through in the COVID environment, travel was non-existent. So obviously, everyone went to a fully virtual atmosphere. From OTC Market's perspective, we actually own the Virtual Investor Conference series that we bought from PR Newswire pre-COVID. So that was timing that worked out for us, because that was a system that was in place already, where we have a database of over 125,000 potential investors. So we found companies using the virtual conference series before COVID, and then dramatically increased during COVID. So what do we see now that thankfully we're back to normal? We're seeing that we're getting a lot of interest in hosting virtual investor conferences, but we're seeing a trend towards a hybrid approach. For example, ourselves in our New York headquarters, earlier this month, we held a hybrid virtual investor conference for metals and mining companies, where over a dozen companies came in and presented. We invited investors to the audience for potential one-on-one meetings as well, but we tapped into the core base of our virtual network, and we broadcast it live as well. So we're seeing a hybrid on that. Also, being here in New York, I'll tell you that we've seen a lot of our CEOs, CFOs, and IROs coming through New York again for the first time, going to conferences. Over the past week and into the next week, we're going to have at least 6 companies either have already visited or coming by as they're in New York to do these in-person conferences where you're meeting one-on-one with investors. And we encourage that. And when they're here, we invite them to come to our headquarters as well and get some more visibility by taping a complimentary video or doing a market open ceremony. So I think what's here to stay is a hybrid type approach. It's a great opportunity to reach investors virtually, but there's nothing like face-to-face, looking someone in the eye and talking about your investment story as well. And I don't think that's going away.
Right. And maybe a follow-up for you. I imagine the hybrid approach that you're talking about maybe allows you to cover more ground and manage your schedule a bit better. Something that gets asked a lot is, how can a company target shareholders that own their peers, right? And maybe you could comment on that topic.
Yeah, that's a really relevant question that we get asked a lot from companies of all market cap sizes, in particular, micro cap, small cap companies. And, we recommend a couple of different ways. I mentioned our virtual investor conferences. Over the past year, we've had over 250 OTCQX and OTCQB companies present at these conferences. And the good thing is, after their presentation, after we leave the presentation archived on the site, we actually come up with a report that we show these companies so they can see who listened in on their presentation. And we usually get anywhere from 50 to several hundred companies attending, and they have to categorize themselves as to whether they're retail, institutional, family fund, that kind of thing. We get about 85% retail, but we get a good mix of family funds and institutions as well. So they get that information and they can reach out to those investors. The other thing that we do is we talk to companies about who are your peers. Take a good look at your peers, make it similar market cap, similar float, similar sector, of course, and come up with 5 to 10 peer companies. And we'll do an analysis to see what investors may own peer companies that do not own this stock. And I know that MZ Group does a lot of great things in that space as well.
Yeah, we definitely understand the importance of peer and shareholder targeting and something that we live and breathe with every day. But that sounds like a great tool and very helpful to get that knowledge and your insight. So what I'd like to do now is maybe transition sort of into some of that topic we're starting to touch on, but specifically about targeting and maybe some current dynamics to consider in the small and micro cap space. So I'm going to turn this back to you, Chris. Just given your experience and kind of what you're seeing and having a good pulse on things, can you talk about the matrix of today's institutional investor in small caps? Maybe more specifically, how have your conversations with portfolio managers changed in the last 6 to 12 months, given today's current market conditions?
Yeah, I would say that's a great question. I would say definitely in the last, call it 6 to 12 months, not only has the investment environment been changed, but just the mentality of your traditional, portfolio manager. And now what we've seen in the last 12 months, just in small caps alone, is that your investor matrix has really migrated from your traditional asset manager, and it's kind of gone into where it's going to a family office towards a high net worth investor, and even a retail component too as well. And that's given the environment that we're in today, where the traditional asset manager, last year, maybe before, they were, in thematic investing, and they were buying, growth at all costs and chasing revenue. And then as we went into a stricter credit environment, they were really sharpening their pencil, and they're saying, look, I got to invest in securities that has a sustainable financial model and is generating cash so they can survive this kind of tight credit market. So in light of that, there was I wouldn't say a glut, but a large amount of small cap issuers that said, hey, we got a great story. We're pre-revenue. We're going to be at an inflection point in 6 to 12 months. We still need to have investors for our company. And that's where the family offices and the real, ultra high net worth investors came in and stepped up. And even the retail played an important part if they were buying into a specific thematic that was, really interesting for them. So I would say that's been the main migration in terms of the matrix. And then when you look about the conversations that I've been having with portfolio managers, it's been very difficult, with some of our clients that had a very challenged balance sheet, I would say, where they only have a couple quarters of cash left on there, and they weren't demonstrating a path to profitability. That's where the PM was really, saying, hey, I'm sorry, I don't have the time or mind share to look at those type of stories right now. But when they hit that inflection point, I'll be happy to look at it. So we were even seeing that during some of our virtual and non-deal roadshows. They weren't getting that kind of interest level, given the way the environment was shaken out.
Really helpful. And, that's, again, more on the institutional side. I will want to come back to the retail side, just to echo some of the thoughts you talked about earlier. But, Bob, given you have a good pulse on things as well, and you've sort of seen the good, bad, and ugly throughout your career, I'd like to just maybe get a take, especially in today's market conditions, on news flow, right? So how much news, is there a gauge that you can share with companies on how much news should be posted? Are there any recommendations or guidelines to consider to keep engagement going?
Yeah, well, OTCQX and OTCQB rules just state that we require a timely disclosure of material news and information that be reflected on a company's quote page. That's a pretty wide spectrum of definition. What we recommend is any news that is salient for your investors, whether you're a U.S. company or an international company, should be reflected on your website. And we do that. We make it easy for our companies. They're able to post that through our disclosure news service. Or if they have a recognized news vendor, we just pick it up automatically so that it's on their quote page. And we really come up with the approach or the recommendation that if you're thinking it's too much information or not enough information, better to err on putting too much information, unless you're an international company and it's news about a very local, provincial part of your business that does not apply to global shareholders. Post it. That's what we say. And then, of course, add to that, to your website as well, any videos or presentations that you've done, which we encourage our companies to do. And whenever you put something on social media, tag OTCQX, tag OTCQB. That helps.
So something you said that really resonated with me is ensuring that the news is salient. This is something that we work with our customers a lot on. And more often than not, too much news, if it's not, again, relevant to the investor, can be viewed as fluff. And people stop paying attention to some of the really good quality news you are putting out that should move the needle for the company and therefore the stock. So I just wanted to highlight that key piece, which is great. So Chris, back to you. Really more towards general targeting of investors in the small and micro cap space. Can you talk about maybe some strategies for trying to find out who to reach out to and things that have worked for you?
Yeah, sure. And I think Bob earlier mentioned in his conversation, really, when we look at a client or in a specific sector and market cap, starting with your peers at the right market cap and float is paramount to getting the low hanging fruit in terms of your holders that you want to try and go after in that. And then we kind of expand a little bit and go industry sector, but then we also kind of go different avenues, whether the security is in, if it has an ESG thematic. So that's a whole subset of investors. If it's in the space economy, another subset of investors, or industrial or clean tech. So you can really expand your addressable market by putting those different thematics in play and do some targeting that way. But those are the main reasons or main targets that we look at for a lot of our clients today to help generate new investors and targeting there.
Right. Yeah, and some of this may require financial software, but something that Chris and I have done for all of our clients, it really is looking, again, echoing what he said, looking at stocks with a heavy concentration of holding, or funds with a heavy concentration of holdings in a particular sector or industry, as well as a high concentration of small cap. And I think generally you can get a pretty good, at least initial hit list, but none of this matters, frankly, until you pick up the phone, right? You can send emails all day, and this is something that we really stress on is, the importance of having a team and the bandwidth to be able to reach out to these investors and have real conversations. And then, a number of other tricks like Novo, mailings to Novo list holders, financial media, as Chris noted earlier. But I think picking up the phone is kind of the biggest one. So, we talked a little bit about the US markets, Anil. I want to transition into sort of a discussion of will targeting US investors have an impact on Canadian trading volume as well?
Well, we at the exchange, we always encourage when a company lists on the CSE. We have a great relationship with Bob and his team at the OTC Market. So we always encourage our issuers to talk to Bob and his team and get the process started on an OTCQX or a QB listing, because yes, that is going to give them more visibility in the US. It's going to make it easier for their shareholders to access and be able to buy and sell shares on that market. Will it correlate on the Canadian side? Not in a sense where, because Canadian investors will buy and sell on the Canadian side, US investors will buy on that side, but it will create more visibility for that company overall, whether they're trading on the Canadian side or on the US. So in relation, yes, it will bring them more. I don't think it's fair to say it'll bring them naturally more liquidity, but it will create more liquidity by ways of awareness and creating the visibility for them.
Yeah. So, and that's just to highlight something that you said too, is the accessibility to management teams. I think that's really important. Something that we talk a lot about internally. And, you even mentioned it earlier in your remarks, sort of that personal touch and power when communicating with investors. So I think that's a great takeaway from this topic.
Yeah, and I could also add that, yes, we work closely with Anil and the team at CSE, because what we've seen and studies have shown is that when a when a Canadian company lists with us on QX or QB, that volumes tend to increase on both markets. You know, a rising tide lifts all boats kind of thing. It's just that you're getting more visibility, and we offer the liquidity in the US, but also we have our traders have the means to route orders if there's better liquidity on the CSE. So, yes, you know, it's just a win-win for both markets. And that's why we work so closely with the guys at the CSE.
And on the accessibility side, Greg, I just want to mention, going back to what you and Bob both mentioned, you know, don't be afraid to pick up the phone and get in touch with your investors, because at the end of the day, you can't really build a relationship over emails. And that you are building a long-term relationship with your shareholders. So don't be afraid to pick up the phone or meet them in person and try and solidify what you have.
Great point. Yeah, I think that is extremely essential. So, you know, one of the things I'd like to consider is related to sector, things that are sector specific. We know sectors are in favor and out of favor. It's sort of hard to keep a pulse on what's in vogue right now and what will work. But let's say a company is maybe in a sector that falls out of favor right now, and this question's directed towards Bob. Should they go dark until things turn around and save their IR dollars, or should they drive harder to gain investor attention in a sector that's frowned upon?
Yeah, well, you know, we recommend that communication is good regardless of what's going on in the sector. We've seen a lot of roller coaster ride in different industry sectors where they're at their peak and then they're just not in favor at all. But we continue to recommend that whatever you were doing before your sector fell out of favor, to the degree that you can, keep doing it. That includes participating in our virtual conferences. And you know, for example, we have upcoming next month a cannabis virtual investor conference. So we know that cannabis stocks it's a bit more challenging than it was a couple of years for them, but our companies appreciate the opportunity to continue to tell their story amidst what's going on in the sector. And then the other benefit is, if you do that, you have the chance to get noticed versus your peers who might be saying, I'm going dark and I'm just not communicating. So we recommend that you keep telling that story, you know?
Mm-hmm. Yeah, that makes sense. And Chris, another question for you, just transitioning back into that retail shareholder group that we talk about so often. It's become such an important piece of the pie. What type of results have you seen, you know, with some of your clients, and does a specific sector they're operating in matter or help? Maybe a follow-up to that, Chris, would be, how can companies capitalize if their, you know, company is in a favorable sector and something that people are paying attention to?
Yeah. No, I've always been, you know, especially in the last 12 months, as part of all the, you know, our IR advisory that we give to issuers, you know, I always have a leg of the stool with the retail component, because I just think it's so powerful for an issuer to consider, because, you know, when you tap into the retail shareholder, they can create a vast amount of awareness for the story. But when that engine starts to go, it also creates a ton of trading volume in the security itself, which also could help your capital raising needs too, as well as a much liquid security is easier to complete capital raises, right? Because that's what, you know, the buy side loves, is a liquid security that they can move in and out of. So we've always think it's a core component to try and engage the retail shareholder in any capacity that you can. You know, there's a lot of, you know, methods that are out there, whether it's Discord or Reddit or the retail trading platforms that are out there, that you can get content out there and generate to engage that retail investor. But look, the matrix and the DNA of these investors, and I speak to them every day, and sometimes they own 5,000 or 100,000 shares of an issuer stock, but I just think they have a lower risk aversion profile, right? So So for those that don't have that cash flow generation, or it's a risky story that the traditional asset manager won't look at, the retail shareholder is there because they like the thematic, or they like because you're a consumer products company, right? And they love your brand, and they're an owner of your brand, and now they're going to be an owner of your stock. So we've talked to a lot of our clients that are in the consumer sector or consumer products, like, leverage your storefront, leverage the assets you have to go after retail shareholders, right? If they're walking into your store, let them know that you're listed on a major exchange. So if they like your product, they can go buy your stock, and it's very easy to do in this environment today. So that's one way to engage the retail shareholder. And then also, if you're in the industrial sector, leveraging drones to do a facility tour of your plant or your operations or what are you doing. It's just that tangibility, even though it's not as sexy as a consumer product, but it's there for a retail investors, it's because drone footage is just great. And it's a great way to look at your business from a physical aspect. I mean, we've just seen such conversion and ROI on doing simple, flight facility tours that take 30 seconds. And then we amplify that over social media. Then the retail investor, they spread it all over their platform. So it's just a great way to really create that awareness engine. And it's a core component of IR strategy when you're looking at new investors.
So here's another one for you, Chris. When transitioning more towards the institutional buy-side investors and analysts, in terms of messaging during a company's, call it quarterly earnings, what thematic do you see resonating with them? And, are there any, maybe it's some of the same that you talked about, but are there any alternative tactics management and their IR teams can deploy to be effective?
I think today the most paramount thing is transparency. I mean, any issuer that feels that they can go dark and not go unnoticed, I just don't think it's right. I think you got to be out there, with best practices, holding your quarterly conference calls and being aggressive on your commentary, during those calls. But in terms of thematics and what investors that we've heard from the buy side are looking for is if you're a revenue generating business, but you're not generating cash flow, that in some capacity you're showing the path to that end milestone, right? And you can do that during your quarterly conference calls on simple slides, where it's up and to the right, where you're having key milestones or alternative metrics, KPIs that you can disclose, whether that's backlog or operational metrics that you set out that investors can follow. And it doesn't have to be the traditional net income and adjusted EBITDA. It could just be that trajectory with all these KPIs going in the right direction, and you mapping out timely milestones, to get you to that inflection point. And that's what we're hearing, from the buy side that they like to see. Outside if the traditional metrics just aren't working or they're not going in the right direction. And then the last thing is just being consistent with your messaging, right? Like just going out there and saying the same thing and executing upon it, and not, differentiating every quarterly call that you get on.
So that's a really great answer. And something that I want to highlight from that is staying consistent with your messaging. Too often we see a lot of small cap companies vying for attention from investors, and especially in challenging markets. And, something that we advise them on is, not chasing the hot dot, but if you happen to be in an industry where it fits into that, talk about some of those dynamics, tout up that you've been early in, why you have a competitive position there. But don't just run into it one quarter and then run into something else the next quarter. I think it creates a lot of long-term confusion, and you get these big run-ups and rundowns that, frankly, is just detrimental to not only yourself, but the shareholders, right? So great answer, and I've enjoyed that conversation. So Anil and Bob, I'd like to transition a little bit more into your world and talk about the exchange the company's listed on. First off, maybe we start with you, Bob. Does where a company trades, like on your market tiers, QX, QB, Pink, matter to investors? And would you mind just maybe talking about some of the differences in those market tiers?
Sure. Well, the answer is absolutely it matters. When you look at the OTC Markets group, within our umbrella, there are some 12,000 stocks that we trade. And you know, if you want your stock to get noticed, you want to be on a premier tier. So we have 3 separate tiers. We have OTCQX Best Market, where about over 600 companies trade, including household names like Heineken, Adidas, BNP Paribas, Air Canada, Ivanhoe Mines. So that's where the premier tier companies trade. There are no penny stocks on OTCQX, meaning if you trade below $1, you need to have revenues or a balance sheet. Then we have the second tier where there's about 1,200 stocks called OTCQB Venture Market. And that recognizes that companies are up to date in all their filings and corporate governance requirements, and positions the company for recognition purposes. And the third tier is OTC Pink companies, where there are thousands of stocks. And you can be trading alongside bankrupt companies, like, for example, recently Silicon Valley Bank, it left the exchanges. They're on OTC Pink. Bed Bath & Beyond is another one. So when you're a micro cap, small cap, large cap, mega cap company, it's very important that you're positioned well for the U.S. investment community to get your story told. That's recognized by the regulators as well. For example, OTCQX, there are 38 states that recognize companies for blue sky compliance, which means that a broker in these states is able to recommend the story and tell that story to their client base in those states and send along research reports, that kind of thing. OTCQB companies are recognized in 34 states. OTC Pink companies are not recognized at all. And so it's really important. And finally, we also send out a compliance data feed to the US brokerage community, and that helps them mitigate risk. In this risk-averse environment, it's very important. They set their risk parameters, they being the brokerage firms, and we recognize market tier in that compliance data feed. So, and we also, on our website, we're fully transparent with OTCQX and OTCQB companies. We show the full depth of book, every quote, the size, bid, and offer for those companies. They can really enhance their company profiles and get noticed in a good way. So yes, it really does matter.
And Anil, if we're talking about CSE listed Canadian stocks that, you know, maybe also trade on the OTC markets, can a Canadian company effectively attract US investors without joining the QX or QB?
They would definitely attract investors without joining, but it would be in their best interest to be on the QX or QB, especially if they're having that push into the US. You know, of course, you want to make it easier for the region that you're marketing in for investors to be able to then buy and sell shares. If they weren't if they're only CSE listed and they're marketing in the US, those investors will have a harder time buying and selling those shares. Whereas if you have a QX or a QB ticker, it's going to make it that much easier. You know, obviously they'll avoid going through the exchange rates and stuff of that nature. But yes, for a short answer, it definitely makes it much easier. And for your first question that you had with Bob, you know, we traditionally have been known as a venture exchange with our 800 companies, but very recently we've launched a senior tier where about 100 of our companies will move into that and be considered non-venture issuers. And it will create more visibility for them because it will let institutions pay more attention to them, to have their own mandate when they look at companies, as well as give those set of companies more accessibility to be included in funds, etc.
That's actually great insight. And, you know, I do want to talk a little bit with you guys about maybe what tools an investor has within the OTC or CSE to increase awareness outside of just being listed. So Bob, I know you touched on a few. Maybe Anil, you could start off by, you know, talking about some of the tools that are available to CSE listed companies, and then we'll kick it over to Bob to share some of his insights.
So, great question, Greg. So at the CSE, we have several different ways that we help encourage the investment community to gain more knowledge about our CSE listed issuers. So they can be from virtual events as well as in-person events like the Go Public workshops, where companies will have the ability to do a pitch to a room full of investors. We've got a podcast that we do and that we highlight certain companies in, as well as a couple of print and online publications. We have the CSE magazine, and they are themed issues throughout the year. We have certain select issuers that we do interviews with and highlight that. Those magazines go out at all different conferences. They're sent off in our newsletter to issuers. So, those are great ways. We've got other avenues that we do for issuers, like the newly listed on the CSE clip. So once an issuer lists, we do a quick, 10-minute recording with them, ask them 5 standard questions about their company, the region, the team, why they differentiate from their peers, and milestones investors can look out for. And that's content that companies can then use to create more awareness for them as well when they've listed. And then periodically throughout the year, we'll do an update for them as well. So at the CSE, not only do we have in-person and virtual events that we'll do to highlight companies, but we also have, different things like the podcast, the magazines, etc.
Great.
Yeah, and
Bob, yeah, please go
sure.
ahead.
Yeah, I could add to that. So the first step is to be on the right market, of course, but then we always say it's like joining the gym. You can join the gym, but unless you go, you're not going to, be in shape, right? So we offer a series of different ways that companies can do that. And just like Anil is talking about, we do have a monthly newsletter as well where we profile companies. We have a podcast series. Of course, we have our virtual investor conferences, dozens of those a year, where everything from sector specific to just general small cap growth conferences. We have a premium provider directory. So if a company, of which MZ Group is a part of, so if a company is really looking for insight into how they can really get to the next level, and they want to look at a firm such as yours, you're part of that network. Or if they want to get research, quite often it's very difficult for a micro to small cap company to get research coverage. So we actually include sponsored research firms within our network of premium provider directories as well, and will refer companies to that. So that's part of it as well. And again, from a video perspective, we offer complimentary interviews to OTCQX and OTCQB companies that we'll then put on our website and send out in our virtual community. And finally, I've mentioned it before, but we really encourage companies, whenever they put anything out that's relevant, to tag us on social. When you tag at OTCQX or at OTCQB on your social channels, it really does help to add your visibility and boost that as well.
Okay, great. It sounds like you guys have a lot that companies can utilize that maybe they didn't even know about or aren't right now. So very helpful to go through that. My last question of the day is going to be directed towards Chris Tyson. So Chris, I always like to ask this, but I think it'd be very helpful. What is the #1 criticism you receive from investors or analysts regarding best practices for small cap issuers?
Wow. Well, that's a hard one, but given today's environment and the number of companies that are de-SPACing and becoming new pubcos, I'd say the #1 thing is conducting a cadence of quarterly financial reporting and having conference calls, right? Those that are conducting them open up, their accessibility to the investment landscape, because for a lot of institutional investors, it won't even get past their bylaws if you don't conduct those regular quarterly conference calls and financial reporting on all your 10Q and K. But also from an analyst perspective, sell side analysts can't pick up coverage if you're not conducting quarterly conference calls too as well. So that's a number one, inbound, feed that we do get from that. And then, kind of dovetailing into that, it's also timely communication within inbound questions that either the management team receives or the IR firm of record that's on the front lines with investors. We've heard a ton of complaints where, portfolio manager has reached out to the CFO or the CEO for a 15-minute call to answer a couple questions that he didn't understand on the conference call or with a press release, and they go unanswered. And those are the biggest, I would say no-nos, because you're lessening the conversion of the buy side to buy additional shares in the open market, or it could force them into a position where they have to sell the shares because they didn't get an answer to a vital question. So what we like to do is really, minimize that duration in terms of connecting them and ensure that the management team is connecting with the buy side and the sell side. A lot of things that we like to do is do pre-call surveys before every quarterly earnings conference call, and do post-call follow-ups with all the covering analysts or analysts that are targets after the conference call. So this reduces the communication gap. It really helps with the next day when your analysts come out with our follow-up notes after you report your quarterly or yearly numbers. And I think it's just been the number one thematic that we've heard from the buy side is to really, it's access to management. When they reach out, they want to talk to them, and they want to talk to them in 24 hours. And we're living in a very fluid information environment. So you should be able to do that. So I would say that's kind of the one of the major pain points in terms of best practices is communication with your investors and analysts.
And here's something else that companies don't realize. You don't really know who's on the other end. It could be an individual investor from a Gmail account reaching out, only to find out they are your third largest shareholder. I mean, we've run into that in the past, and thankfully we've been very timely in our responses, but that does happen. And two other areas I just touch base on, again, if you're in a sector that's out of favor, don't go dark, continue marketing, be out at conferences, pick up the phone, continue doing your targeting. And then, other things like knee-jerk reactions. We've seen, short reports come out on companies, and the immediate reaction is let's rebut that, right? But that just fuels the fire and creates more awareness, points to it, and more often than not, you have a follow-up. So just really being consistent with your messaging, the stuff Chris talked about, just on accessibility and the detailed follow-up and regular cadence of reporting and updates for shareholders is really helpful. So, before wrapping it up today, if there are any questions, we'd be happy to answer a few of those. We can direct them to anyone on the team. So, if there are, please feel free to submit in the chat function. I would be happy to give them a crack at answering. Otherwise, like I said, following this call, you can email info@mzgroup.us, and we'd be happy to get back to you in short order. So with that, we'll open it up for some Q&A and just pause for a moment. All right. Well, it looks like the audience is shy today, which is totally fine. So first of all, I just want to wrap today by thanking Anil Mall from the CSE, Bob Powers from OTC Market, and my colleague Chris Tyson for joining this small cap webinar. It's been our pleasure. And again, we look forward to keeping in touch and going from here. Thank you for joining.
Thanks very much.
Thanks to everyone who attended and MZ Group for hosting us.